Morning, everyone. It's the 26th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
Happy Friday.
Yeah, nice.
We
Nice.
made it.
We did
We
again.
made it. We done it again. So as of Monday, we can all start hanging out in other people's gardens as well, which is pretty cool. One step closer to the pubs opening.
Yeah. It is a bit weird, isn't it? Two families can meet in the garden.
Or six
or
people.
or six people. So
Kids football starts again next week, which is good.
yeah, I saw that Connor has actually been offered some work experience next week in is it half term or something next week?
Yeah, it's half term next week. 2 weeks off
Right.
they got.
Right, yeah, he's been offered that at one of the boys' football clubs in Chelmsford. So
Oh, nice one.
yeah, that should be pretty good.
I'm going to try and get my son into a soccer school for both weeks, just so it keeps him busy running around and gets him back into the groove of playing a bit of sport and football again.
Yeah, what are they going to do, like in terms of testing and things? Are they going to do anything like that, or
Don't
just
know. It's
let,
run
let them
by
get on with it?
Southend United, the
Okay.
soccer school. So
Yeah.
let them deal with it.
Yeah.
I think it's all COVID secure, but it's part of the rules now. They're allowed to start playing again. So
Yeah.
I think five-a-side starts on Wednesday night for us old boys as well down the leisure centre. So
Wow.
that'll be nice. Try not to
Is it?
pull any muscles.
Yeah. How many injuries? I should go back to physio actually.
Yeah.
My sports injury thing. I would make a fortune, I think.
Did
I
you
was
do a
often,
bit? Did you?
yeah, I did. Mainly when Connor was born, because he had cerebral palsy. We sort of like thought let's. I was sort of doing coaching for Cameron's team, and they
Yep.
didn't have any first aid guy, so I was doing the first aid. Then I sort of did a proper FA first aid course,
Oh,
and then
nice
I
one.
got into sports injury and management of sports injuries, and then did the massage course. So
You didn't tell me that when you come and saw me pull my groin. You weren't offering up your helps to massage my groin for me.
no, you know what? Sort of groins, sort of that's
No
probably
go
needs a
area.
little. Yeah, exactly.
Okay. Okay, so let's crack on then. So first up, we've got AstraZeneca continues to be in the news. Obviously, the wranglings between the European Union and the UK are ongoing. The main headline out that I saw was that more vaccine shots had been exported from Europe since December than actually had been administered in the whole of the European Union, which is pretty crazy, really. Obviously, they've got AstraZeneca have got contracts to fulfil, which they need to do. But hopefully, it seems to be coming to a bit of a truce, and we're getting it dealt with. We also saw Joe Biden have a press conference yesterday touching on the issues, including China, who has promised to outspend on innovation and infrastructure, but declined to say whether he would keep tariffs in place on the majority of Chinese imports. And he also touched upon the diplomacy situation with North Korea. As we mentioned yesterday, they've sent out a couple of missiles. So we wait and see what happens there. He is open to diplomacy, so we'll see what happens. Obviously, the situation with the container ship in the Suez Canal is showing no signs of budging. It still looks as though it's wedged across the canal, and it's seriously building up a bit of a backlog. I think there's $10 billion worth of trade either side of it or 10 billion in total.
Well,
That needs
that
to get
was
through.
as of yesterday, wasn't it? So it could be more than that now. It's going to be building up every day, isn't it?
Yeah, it's getting a bit crazy. So obviously now what you're seeing is tankers and shipping ships going all the way around Africa, which is obviously going to cost more and going to face further delays. So apparently there was a big delay on coffee, which was used to make Nescafe, which would be a disaster if we can't get hold of our coffee.
It would be. Yeah, we might have to start
Don't worry
drinking
about the oil and gas. Just worry about the coffee.
What about the stocks of decaf shit that we'll have to
Well,
to sort of like stoop to?
drop me out of that. Yeah, so that pretty much sums it up, I think, in terms of news. It was a bit of a rebound overnight in Asian markets. I don't know if that's a continuation of the theme that we've seen pretty much all week, where we're getting a rally in stocks first thing, and then it fades away. Steve, I don't know if you want to take that as a cue to show us what's going on with the indices this morning.
Yeah, I think. Well, strange one. I think it's all changed. Like normally we're looking at the indices this early in the morning and saying 8 o'clock to 9 o'clock we have this really nice positive candle. We're not getting it at the moment. What's happening? Is it all changed? Are people actually looking at the Suez Canal and thinking, if this goes on for another sort of 3 or 4 weeks, then we are in a bit of trouble? Could this be the catalyst that we've been talking about? You know, what's going to be the catalyst for this, the end of this indice rally as we know it? So looking at the FTSE, the indecision shooting star on the hourly chart. Let's make it a little bit bigger so you can see it. That's engulfing the previous couple of candles. So that doesn't look too good. Also, DAX. Well, it's just turning around as I'm speaking. Obviously, you've got the big DAX whales watching me. But if we get a break below this 14,690, then I think we might have been triggered on our short this morning, haven't we? 14,770 something. So that it's sort of like it's a bit of a change from looking at this. So maybe we are getting, maybe this is the turnaround. Who knows? That's the 8 o'clock. That's the 8 o'clock. That's the 8 o'clock. And that's the 8 o'clock. So 4 8 o'clocks, and then we got Friday profit taking. Is that what it is?
Yeah, maybe.
Is that how they've done it? Yeah,
Possibly.
We see you.
We've worked out the box.
We see you. But it is, you know, that's what they do. And you can see the sort of like the resistance that we've built up in the Dow. On this is again an hourly chart, the short-term chart, but it doesn't seem to really want to get above the 32,800 level, and it's reversing a little bit now. So maybe a small opportunity. I'm going to go with that a gun-to-head challenge. The Ichimoku Cloud capped price action in Nasdaq over the last 3 hours. S&P is above it. So is obviously the Dow is as well above it, but S&P above it, but reversing slightly now. So but overnight, as Joe mentioned, we saw this really nice rally in the Asian stocks, but again stalling a little bit. So potential for a little bit of reversal, but I'd keep the stop very tight. Obviously, if it gets above the highs, cut it and just lick your wounds and go somewhere else. Crude oil, nice turnaround from yesterday, 3 o'clock. We've seen a nice upward trending move, and we're above the hourly Ichimoku cloud on that. Brent crude oil, again, very, very similar. Trades at a premium of around about $3.20 at the moment. Gold had a little bit of a foray yesterday. We were trading around these levels. We had a big spike higher at 1 o'clock and then a spike lower at 5 o'clock. So overall, pretty dismal performance from gold. Still sort of, I don't know, opinion on that. 4-hour chart, it seems to be sort of dying off a bit. Daily chart, gold. Let's get rid of this. Yeah, daily chart and gold. The momentum seems to be stalling a little bit. Really sort of trying to take its cue from the dollar, which it continues to show signs of strength. Joe will cover that. Yeah, but it's sort of like being led by the dollar. There's, you know, the treasuries, the yields on the 30-year 2.378, on the 10-year 1.657, hanging about them sort of levels for a little while now. So I don't know. It's a bit of a sort of damp squid for the gold. It's just waiting for the next move. I don't know which way that'll be at the moment. Overall, long term, I'm bullish on it, but I still feel that we have got potential to sort of like, you know, to sort of like come lower. This is the long term chart. Mine sort of almost like investment chart. I'd be buying gold at 1450 for the next move higher, at least. But potentially going to get it before then. Not sure. A little bit of a sort of turnaround over the last few weeks, but not convincing yet.
Cool. Is that everything from you, Steve?
Yeah, that's pretty much it from me.
Lovely. Okay, so we'll get straight on with the FX side of things then. So first up, looking at the baskets, and as you can see, everything other than the dollar has been trending lower. we are seeing a little bit of a turnaround today in the fortunes of the dollar index. We can see that that's down at 0.1% as it stands at the moment. If we look at how that looks on a standalone basis, then continuing on from this break of the 92.50 resistance level, we saw a decent candle yesterday. A little bit of consolidation within inside the range that was posted, so nothing to worry about, I don't think, from the bull side of things at the moment. And I'm really of the opinion that this is going to continue higher up to this 94.00 level in the shortish term. So that's still my my preferred play for now. If we look at some of the other currencies around the dollar index, this one was catching my attention today. This was, this is Aussie Yen. So we saw a decent break of this channel here on the 23rd. And now what we're seeing is a retest of the underside of that channel. So I'm quite tempted to have a look at that on the short side today, potentially forming a bit of a top as well. But certainly from a technical perspective, selling on the underside of the break of the channel would be a reasonable entry point, I think, for a continuation lower. If we look at Aussie dollar, again, we've seen a break of trend. We saw a retest up here and also formed what looks to me like a head and shoulders top. We broke down here on the 24th, and now we're seeing a retest today after a doji candle was posted yesterday. So is that, from a technical standpoint, a decent entry level on the short side? I think it possibly might be. In terms of the targets on the downside, we're looking for 72.35 on that, which is the measured move of this move here from the highs down to that low there to form the neckline and then projected lower. If we look at euro sterling, this continues to hold around this support at 85.38. Bit of a turnaround yesterday, volumes dropping off as well, you can see there, but this level continues to hold. If this breaks, then obviously we'll be looking at a continuation lower on that one, but potentially some opportunities for some keen-eyed traders to buy close to this level in anticipation of a bit of a bounce. But as you can see, there's a lot of indecision around here and a lot of doji style candles that have formed. If we look at euro dollar, that continues to move lower following the break of support at 118.35 and looks to be heading towards our first downside target, which is the 38.2% Fibonacci level at 116.95. So this is a sort of range where I expect maybe some reversal or some sort of relief to form, but for now, certainly the momentum is bearish. If we look at cable, we saw a break of trend here as well, following the strength in the dollar index. Bit of a pullback in the last couple of days or so, potentially looking at a retest of the underside of that channel, which then may lead to a continuation lower on that one. So keeping an eye on that as well for now. New Zealand dollar versus the US dollar. We've seen a break of trend here and a pretty impulsive move to the downside on the break below 71.00. A bit of a bounce back today, maybe just a bit of a short-term correction, but for me, it is a case of selling into rallies there, looking for a target down to 67.35. If we look at some of the dollar pairs, we've got dollar CAD, which is trading in this ever-tightening wedge. Obviously oil influenced by this as well, but if we get a break, I think above 126.29, then we will break above this wedge, and that could then trigger a pretty decent correction higher on dollar CAD, so keep an eye on that. Dollar Swiss, that continues to move higher. Swiss franc continues to look very weak, arguably a bit of a flag formation here, a decent breakout, and we are continuing higher today, no signs of that slowing. And if we look at dollar yen, interestingly, we see a break of this trend finally after a good number of days of trading below it. And obviously, we've got a key test today to see whether that can hold above that on a closing basis. And if it does, then we can go back quite some months and you can see how long this downtrend has actually stopped the price from moving higher. We're going back to June 2015. So a decent break of the trend channel here, or the trend, sorry, and we could start to see some fairly impulsive moves to the upside there on that over the short to medium term. That pretty much wraps it up on the FX side of things. There were some other charts that I wanted to run through. We rushed through talking bull yesterday, but there's I guess more of a a wider issue that I wanted to discuss, and that's around sort of the health of the market, I suppose, overall, talking about equity markets and risk assets, etc. And I'm keen to get your take on this as well, Steve. So first of all, I wanted to look at the bonds. This is the 7 to 10 year US Treasury bonds. Obviously, they've been trashed over a number of months as people have favoured riskier assets. But quite interestingly, we are trying to have a go at the upper side of this downtrend channel, and potentially some sort of rounding bottoming formation taking shape here. So we've got resistance at 152.91. Obviously, this is an ETF, so it's not the exact price, but it's pretty close to it. So I'm waiting to see what happens here. If we see a break up, then I think that may lead to a continuation higher. And if that happens, then that would suggest that money is probably coming out of things like equities and riskier assets, and maybe taking a more defensive approach to investing. Steve, in terms of sort of catalysts for risk, obviously this changes all the time, but what do you reckon about Bitcoin as being sort of a bellwether for risk at the moment? Because obviously it's well loved by many market participants now.
Yeah, and I suppose also we sort of like look at Bitcoin probably wrongly, just in terms of Bitcoin against the US dollar, where we should be looking at it maybe more against a basket as well. The Bitcoin basket would give us a bit of a better view of it. Because of the dollar strength, obviously we're seeing weakness in Bitcoin. I sort of think that it is one of those could potentially be a safe haven asset.
It looks like it's traded like a risk asset, I would say, would be my opinion. I think maybe down the line it could have more safe haven characteristics, but the rally that we've seen in all sort of assets, Bitcoin has been well up there in terms of one of the best to have been involved in. I'm just wondering whether this sort of break a trend here is maybe a bit of a warning shot. I mean, that candle that we posted yesterday wasn't particularly nice, and obviously there was a big increase in the volume that came with that as well. So wondering whether or not things are set to cool off a little bit in Bitcoin. And I also think that if there is to be any sell-off in risk assets, there's probably a fair amount of liquidity in Bitcoin at the moment of people that have done quite well. And often what you see where sell-offs exacerbate, people sell the stuff that they've made the most money on in order to fund the stuff that they're losing on.
Yeah.
So
I don't know. Yeah, I think it's a tricky one, isn't it, Bitcoin? Because for me, it's still a long-only market. There's no sort of people there thinking, right, okay, how can we hedge ourselves? So should we sell Bitcoin? That'll hedge us against whatever, because it doesn't work like that. It's just a one-way traffic still at the moment, until it becomes something that's widely and worldly accepted. Then we'll continue to have this underlying bullish trend to it. The only reason it'll come off really is in a big way now is people taking profit because they're panicking to get out of it for whatever reason. End of the world scenario for cryptocurrencies, I don't know, more restrictions or government imposing different restrictions on trading Bitcoin or holding Bitcoin, and that would have a negative impact. But I can't see anything else that's going to be negative towards it, because you're getting big companies accepting it now as part of their portfolio. They need to have Bitcoin. So I think still we've got a long way to play out in this story. Yeah, at the moment a little bit of a reversal. I don't think it's a reversal in trend. I think it's just a correction. And whatever you sort of look at, it's definitely some. There is value in sort of like just having it and holding it and just let's see where it goes.
I went to look at NASDAQ as well, because you could say that's a long only market given people's insatiable appetite for tech. But again, that looks a fairly similar chart in that we've broken trend. And don't get me wrong, I don't think it's bearish by any means, but I do think it could be due a bit of a shakeout. And if you look at this sort of rounding top formation potentially that's taking shape here, I'm just wondering whether or not that potentially is the start of something a little bit more sinister. And I was looking at this, I mean, a 38.2% Fibonacci retracement would be classed as a healthy correction in my mind, and that would,
Yeah.
create some value in the market. And that's down there at 11,128.
Yeah.
And then I started maybe, drawing a bit of a head and shoulders top on this, something like this. It is a downward sloping one. Which often are more bearish, but I think this sort of married up in terms of a measured move, well, just a bit under it, but I'm a bit concerned about that. I mean, the S&P still looks pretty strong. It's still above the trend line, and there's not as much concern there, but volumes have been picking up on this selling as well, which is maybe a bit of a warning shot.
Well, that is the what you look for when you're talking about head and shoulders formations, that sort of volume spike into the right shoulder. So and you really, it's almost Joe, as if the spike the sort of neckline has already been broken for that from so if you just take it just to the top of there, it's broken. That's where the spike in volume happens, when it sort of breaks through that neckline, and it's come back and retested it, and it's overshot on the upside.
Yeah.
So it could turn out to be a complex head and shoulders, because if you look where your left shoulder is, you could say there was a left shoulder to the left of that. Yeah. So that then you've got two left shoulders, two right shoulders, and for me that I know that we've had the break of the neckline in between the two right shoulders, and potentially, but that builds up to an even bigger negative move. Yeah, I sort of agree. The techs have enjoyed a huge ride higher, but that I think they're well overdone. They're all based on future earnings, and
the other thing to look at is the Russell 2000, which is sort of 2,000 smaller companies in the US, which I guess that's a size trade. So, you get rotations between large caps, mid caps, and small caps. And small caps have been a fantastic source of return for investors. I mean, they've just been, again, pretty crazy. But at the moment, remains above the trend line. But, there are some signs here that things are potentially starting to top as well, certainly starting to round a little bit here. And I've got this level here marked at 2085. If that breaks and we get a break of trend, then I think that could see some profit taking in some of these, because that's a crazy run higher. Pre-pandemic we're here and it's up here, so these
that makes you're sort of scratching your head and just saying why. Aren't you really?
I mean, from the pre-pandemic highs, we've then gone up another 38% from there on the index basis, and there'll be obviously individual cases in there which are thousands of percent.
Maybe it is just the world gone mad and just thinking, I've got to be part of this, just get on it. And the retail traders, highly leveraged, are sort of like accumulating now.
That's the thing. You're absolutely right. In here, this rounding formation is just a sort of distribution that we're seeing between the smart money getting out and passing it over to the retail investors. That's often how tops form, isn't it? It's maybe ongoing there. Well, it's obviously a story that we need to watch. But other indicators,
it's always a thing to do. You sort of you should be waiting for the break of the trend before you get on it.
I'm just thinking that maybe these are things that we need to start watching over the coming weeks.
Absolutely, because they happen so quickly as now, and the sort of moves will happen quickly. And I do sort of can still see a similar event that we had at the start of the pandemic, where we were seeing limit down in markets regularly for a sort of split period of like 2 or 3 weeks. Now, there's nothing to sort of stop these markets having a limit down day after day after day after day after day. We haven't seen that ever really in these sort of markets. You have circuit breakers in there, which then allowed the governments to take action to stem the flow. But there will come a time where that they will be unable to stem it, and that will be the really painful time. It'll be a market event, maybe the Suez Canal, maybe a 400 meter boat, I don't know. that causes it. Who knows? But it's you have to watch these things and bear them in mind when you're making these investment decisions and these trading decisions as well.
Yeah, I mean this is a sort of typical market that you would look at when you're sort of maybe a bit fearful or worried that things may be on the turn. This is the VIX.
Yeah.
It's down at these levels here, which is looks like a pretty reasonable support. We've got an unfilled gap here from 21st of February last year, when the pandemic really sort of started to kick in. Obviously, we saw that massive spike to the upside. Nothing really to suggest that it's turning just yet, but we are approaching some key support levels, so I think that's worth bearing in mind.
Yeah.
The other thing I quite like to look at is the put call ratio, which if people are buying puts and calls, then obviously there's an increase in the amount of protection that's being bought against the equity markets and other assets. So this was a bit of a call, maybe a warning shot again. A breakout of a wedge, and we're sort of trying to break out above this high that we saw on the 5th of March. If we start to see this increase, then more puts are being bought than calls, which
Right.
Puts are obviously protection against downside in typically equities. So I'm keeping an eye on that as well.
Where does it take it from? This actual one here. What is it? It's the put call ratio on what? On which
On the
market?
CBOE.
Okay. So indices is basically based on indices.
Yeah, put call ratio. So this is a total put call ratio composite that I'm looking at here. So there is a CBOE one as well. Not so much that we can gather from that, but on the total version, then we could argue that we're breaking out maybe of a bit of a wedge there. And finally, the chart I want to show you, I talked about this a couple of weeks ago. It was this kind of hybrid chart that I've built, which is a combination of the Euro Stoxx 600, the FTSE 100, and the S&P 500. So this chart is a combination of all of those indices together. And as we can see, we're back up at these levels. We've filled a bit of a gap. I don't know if that's relevant or not, but we're up at these sort of levels and stalling a little bit. There is potential for a bit of an overshoot to make maybe higher highs. But the real interesting part for me is the ratio below here, which is the 10-year government bonds of Europe, UK, and US combined together to form the ratio. So when this is moving higher, this chart at the bottom, that suggests you want to own equities over bonds. When it's moving lower, suggests you want to own bonds over equities. And for me, this is at quite an interesting level now. As you can see, it's into sort of downtrend resistance. It's at the top of a channel as well, and we're approaching the previous highs. So again, potential warning signs forming for me on equity markets. I'm not saying sell everything now, but maybe lightening up a little bit would not be a bad idea.
Lighting up at the all-time highs, not a bad idea at all, Joe.
No, it's all right, isn't it? That so
it can always go. You
can always get back in.
Yeah, buy high, sell higher. That's who knows. It is just trying to sort of like send that warning shot out there and just say be careful, because although everyone should be careful when trading,
the market, isn't there?
Yeah, I mean, for us, we've been sort of like seeing these convinced like this equity rally at all, but it's very difficult to you sit there short of it and just sit and close our eyes. We look at opportunities to get short, which are good risk reward opportunities, but the next day we might be looking to buy a dip or whatever. So it's you can trade these markets both ways. Over the sort of more medium longer term, there's definitely signs of topping out.
Yeah. Anyway, let's move on to reasons why you shouldn't listen to us. This is the gun to the head challenge that we do every day. So we just pick a trade idea on an intraday basis, something that we fancy right now, and see how we fare up until 9 o'clock in the evening. So yesterday we had a long on Euro CAD, which was stopped out for a 17 tick loss or a 1 hour loss. And Steve, you were stopped out and you're short on gold for a 5 tick loss. for a 1R. So obviously we had some very tight stops on these trade ideas. We're looking for home runs really on an intraday basis, and it's it is only just to be a bit of fun, but we are under a bit of pain at the minute. We can't seem to string any series of wins together, but clearly overall we are performing adequately. We've done 340 episodes of this, so we're averaging around about 0.25R per episode, but it's not been particularly fun to follow over the last few weeks or so.
Absolutely not.
So, Steve, have you got an idea that you fancy sharing with us today?
Yeah, I'm going to go with it. I'm going to go with selling DAX. This to me is a little bit of a warning sign. The move up to 14,776, which is basically stalling in front of the previous swing high, 14,804. And again, just the start of this hourly candle, we've opened up at 14,730, spiked up to 58 and back down again. So a little bit of topping formation there. So I'm going to sell this now. 14,734. I'm going to leave the stop at 14,806 because that is just above the swing high from back there. So that's not a bad place to leave it. And let's go for it. Let's go for the big daddy-o. In fact, let me go for that. I like the number 13. So 3.6 to 1 risk reward selling DAX at 14,734.5. Stop is at 14,000. Has it got to 813? Oh, 813. I wanted this to be 13 as well. No, that's no good. 25. Let's make the target 25. Bring it in line with the just in front of the previous swing low. So selling at 14,734.5. The stop is at 14,813. I am tempted. You know what? No, I'll leave it there. Target 14,425.
Cool. Good luck. I'm going to take a look at Aussie Yen. So this is the daily chart that I talked about earlier. We've got a decent break of the trend here on a fairly impulsive move to the downside on the 23rd of March. Consolidate a little bit, and now we're seeing a retest of that channel. So I think this could be a reasonable opportunity to get involved on the short side. If we take a look at the intraday chart, just get a clean chart up, remove that. So I'm going to sell it here. Oh, that's a long trade. Short trade, sell. It's currently 83.36. Let's go 40 tick stop, 83.76, and target a move down to those lows just there at 82.29. So looking for 2.66R. I mean, I could tighten that right up, but I want to give myself a chance, give it a little bit of wiggle room. And yeah, that's my trade of the day, looking for 2.7R on that.
Nice one.
Okay, data-wise today, not a hell of a lot from what I recall. Can't find my screen with all my information on now. There it is. German IFO index, which has already come out at 9 AM. So that may have caused that spike higher on the DAX, which Steve is trying to fade into today. We've also got US personal income and spending data and the Michigan Confidence Index, which will be released later on today. I haven't got a time on those on my sheet for whatever reason. I think that's about it, Steve.
Yeah, it sounds like it, mate. I think we've bored them for long enough.
Yeah,
gone on a bit too long. Yep. And yeah, good luck everyone with today's session.
Yes, good luck all, and we will see you all on Monday morning. Have a great weekend.
Cheers.
Goodbye.